Good morning, everyone. Welcome to our Monday morning trading session. Hang on here a second. I'm going to get the screen share going. I'm a little bit late this morning getting my charts set up, so forgive me. I'll do that here in a second, but first I'll address Bill's question, because Bill says, in case I need to leave here, he's asking, are we well below the support and resistance lines? No, not yet. You can see the lines adjust. So we do have current ranges for today, although Friday's session, of course, had that huge sell-off. All right, bear with me here just a moment while I get my trade manager loaded. So much needed volatility coming back into the stock market, in particular the NASDAQ. Bill says, I've got an issue then. My lowest purple line is pegged at 57.49 quarter. Okay, well, the first thing you should try, Bill, is rebooting your Ninja. Sometimes that's all it takes. If you still have an issue, you may want to try uninstalling and reinstalling the support and resistance lines. And if that still doesn't work, if that still hasn't solved the problem, then you're going to need to get a hold of Ben. But I know those will be the first two things he tells you to do. All right, well, careful what you wish for. Look at this volatility. The market's nearly untradeable here. It's moving so fast. Going to get a cloud crossover here for you Raptor traders. See, we had the number 2 signal shortly after the open. Fantastic follow through on that. We're going to get a soft edge buy, or pardon me, cloud crossover signal. That's the number 1 signal, by the way. Oh, maybe, maybe not. Oh. Okay, well, if you're going to be like that, oh, there's a soft edge sell now to the short side. Aye, well, you're pretty much throwing darts at this point. I might take a single on it. We've got a chance for a second push entry. Oh, now we're getting the crossover buy. All right, let's try that first. Oh, and I'll take a second push on this one too. In fact, we have the market kind of in a sideways range. We could do an OCO. Oh no, we can't, because there it goes. Oh, brother. Now we're going to get a cloud crossover going the other way. The problem, besides the market moving insanely fast, is that to cover these trades correctly, the stops really do need to go above the high if we're selling and below the low if we're buying. This is just kind of a wild day here this morning. Okay, well, and there's the number one signal that I was waiting for, and that exploded as well, so I didn't get a chance on that one. I'm looking here at Steven's comment. Steve saying maybe we should be looking at the YM because the NASDAQ is just out of control this morning. Let's toss the YM up here. It does tend to move a little bit slower. And you can see we got the cloud crossover signal here just prior to the open. And definitely a little bit of a smoother pace. Andres was asking in regards to the NASDAQ, that big pull move up. Andres says, shouldn't we wait for a deeper pullback after such a move? And this is kind of going to go hand in hand with Aspen's question. Aspen asks, Eric, what do you do when you get back-to-back Raptor 1, 2, or 3 signals? Which one do you choose? Okay, the signals are all valid regardless of the depth of the pullback, regardless of how the signals are printing or how quickly they're printing. I do try to balance the signal with the context, however, and I think I'm going to have to go back to the NASDAQ to make this point because the YM not quite there yet. Okay, well, you can see some of the signals reset because we're working off different bars right now, but I do believe we had like a number 2 signal print somewhere through here and a number 1 signal or something of that nature. Okay, well, we can take this number 1 and we'll take this number 2 right here. Okay, so we're getting a cloud crossover signal here. Just let me try this. Let me see if I can't get the screen to reset. No, it's not going to do it for me. And now we're going to get a crossover sell. Gee. And there they go again. All right, what I was going to say is I want to take the context into consideration. I want to do my best to interpret what the market might be trying to tell me. So if I'm producing a number 2 sell signal right here, this kind of meets all the criteria that we were looking for a sell signal, isn't it? We have a trend, and we also have a test of the extreme. If, say, this signal right here was a hard edge bounce, it's not, but we're going to pretend for a moment. A hard edge bounce is a continuation signal. So is there really a trend that is established that's going to try to continue? If you think so, then you should take the signal anyways. You should give serious consideration to any of the signals that print with a number attached. They won't all be tradable, however. Like here is a number one signal, and really to make this trade tradable, I would have to trade it down here, but Trade Manager says, no, sorry, Eric, that one is out of reach. I would not put a stop here just for the sake of trading it. You know, I wouldn't change my method of trading, or usually I wouldn't change my method of trading just for the sake of taking a trade. Why? Well, because sure, you may get into the trade only to have it reverse and stop you out, which of course is not the objective here. I know I really ham-fisted the answer, but you're kind of balancing the context of the chart with the signal. I don't reverse on the signal itself. So here's a number two signal, followed by a number one signal and a number three signal. Do we have everything here in place for a possible reversal? Yes, we do. Because it is a counter trend signal, I'm probably going to restrict my position to a single contract. All right, so I would take it and I would probably risk it something like that, or maybe even below the next support line. If the market goes up, hits my profit target, great. If not, well, I've reduced my risk a little bit. But again, in context, a number two signal, a counter trend signal, is going to be higher risk because, well, this morning we've just seen incredible follow through both directions. They seem to have maybe settled down a little bit. That, by the way, is kind of a typical, what used to be a typical Monday morning, when the markets finally got back at it after a weekend. You would see some really crazy volatility. Okay. Here we go. Okay, I'm going to buy this one. I'm probably not going to have a chance to set it up. Oh, there we go. I will have a chance to set it up.
Order
pending. And there they go.
Order canceled.
So I can close that order. Look at this. May as well just fade all your entries. Okay, gonna get a cloud crossover to the short side now. There it is. Try a second push on this one, perhaps.
Order pending.
And there goes the other way. All right, now we're getting a number two soft edge buy, and wait for a second push on that. Okay, so I'm going to try it here to the long side. This market is just crazy here this morning, so I've ditched my profit objective in hopes of catching a bit of a runner. And I'm hoping my stop is deep enough. That's going to be the challenge on this one. Oh, I didn't even get a chance to make all the notes in my journal. Before I got tagged out on that. Stinkers. I thought about setting up for another soft edge buy there, but it's just wild. Not getting a chance. Signals starting to mash up on each other. Yeah, Aspen, you're right. Like Aspen said, it's safer just to stay on the side. The market's in a bit of a drunk state, and that's true. It's just going back and forth. All right, here we go. Soft edge buy. We'll give this one a go. No, we won't, because it keeps heading lower. Yeah, way to go, Tony. Tony's got the right idea. He says I've been scalping and doing pretty well. Right now, I thought we were going to see some buying show up. And the reason I say that is we're trading really close to Friday's lows. It looked like, we were slowing down here a little bit. I'll show you here on the Eagle. It will be a little bit more obvious. So there's the overnight. No, sorry, my mistake. Those are Friday's lows right there. Okay, the Falcon starting to look a slight more bullish there. The Hawk now getting a little bit more bullish as well. Okay, getting a first micro macro cross on the Hawk. So we can just look at buying that. Stop's got to go down a little ways though. Oh, I didn't mean to get 4 contracts in on that. When the market is crazy like this, you're going to be better off controlling your risk with probably in manual mode. All right, it looks like it might take a run here, so I'm going to try to run this one out with a little bit of luck. Where's my next resistance zone? Where are you? 56.99 quarter. Or, sorry, what was that? Yeah, 56.99, all the way up there. Oh no, don't tag me at break even. Oh, they're brutal. They're brutal here this morning. All right, let's try this again. So here's a red bar buy signal. Actually, we should be getting a cloud crossover signal on the Raptor. Nope, not yet. All right, another crossover sell. Can I cover it? Oh, I can.
Order pending.
And now the buy.
Order cancelled.
It's kind of like they say, it's like herding cats. Okay, so we're going to get a cloud crossover now to the upside. We're probably just going to have to rely on the market buttons here, buy and sell market. There it is.
Order pending.
And let's see
Cancelled.
if I can't run this one out just a bit. Stop's going to go down here. Almost out of opening range. Well done, Peter. I love Peter's post here, and I can empathize with what you're going through here. Peter writes, good morning, Eric. Well, good morning, Peter. Peter says, made money for 10 days, then gave it back on Friday. Notice that I did 14 trades to try and catch the wave. Didn't realize it in the moment that I did that many trades. Over the weekend, I wrote down a rule, no more than 3 trades per day. I did just one trade today, up $30. Now I have 2 more. It really makes me wait for better trades. And you know what, folks? That's the whole point of having a trading quota. If you know you're only going to trade 3 times a day, you're going to be picky. You know, if you get signals reversing on each other, like you get a number 1, a number 2, a number 1, a number 1, a number 2, a number 1, you're going to hold out. You know, there's no point in jumping on board. Yeah, you might miss a big move. So what? Shoot, I miss big moves all the time. You can see we're very, very sideways here. Yeah, like Prashant says, NASDAQ extremely volatile, would not touch it this morning until it stabilizes. And that's true right now. It's a slugfest. You pick a direction and you try to hold on. The bulls and bears equally matched at this point. Just a ton of volume going through in a very, very tight range here. The eagle is going to show it really well. So here's our range right now. And all that volatility, all that volume going through on such a very, very tiny little range. Okay, so I hit the break even. Time to bring this bad boy up. Oh. Okay, so I got another crossover buy. I didn't have a chance to actually get the order in place. See, you can't even get a trade on because the volatility is so big. Oops, I didn't mean to delete my break even. All right, stop that. Stop that. There we go. Okay, now I can enable my stops, get it up there. Getting tired of getting tagged at break even all the time. But at the same time, I don't want to leave a monster stop in play. All right, Tony says when you're using the buy and sell market buttons to enter the trade, how do you adjust your stop? Okay, well, here we are, we're getting a buy signal. So I hit the buy market button. If I have a stop enabled that's displaying below here, that's where Trade Manager will put my stop. See how it's picked it up now? If I had a, oh, this might actually go. No, it's not. I'm going to show you here in a moment when this trade closes out how to set the default stop on Trade Manager. Oh, this is just silliness here today. If I had half a brain, I would take the profit when I had it. All right, so now with this number 2 signal, if I chose to take that and I hit the sell market button, my stop would display right up here where the Trade Manager is. Now I've got a buy signal. As you can tell, I'm a little preferential to the buy side here this morning. Now my stop I have set at a 30 tick default. Once it's active though, however, I can take it and I can move it away if I feel that it's too close. Let me show you how to set that up. So you're going to go into your Trade Manager. That's a strategy, so right click, go to your Trade Manager. Make sure your Trade Manager is turned off to make these changes. And then you're going to go up here to where it says invalid trail stop. This is the setting that you're going to use to tell Trade Manager if the stop strategy is displaying on the wrong side of my trade, what do I want my default stop to be? Yours is probably going to say 10 ticks. I find 10 ticks too tight, which is why I changed mine to 30 ticks. And then when you make your changes, go back to your Trade Manager. Remember to turn it back on. And then you can apply your changes. And I think they still backed up on me. Ay, chihuahua, what a crazy kind of morning here. All right, well, I think we're just going to put this away for now.
Order pending.
Yes, like Ryman says, it's a good idea to save your template once you make your changes so that you don't have to redo it every time you load your Trade Manager. We just have extreme sideways volatility. Okay, well, we're all over the map here right now. And when the market has given us a clear range, it may be time for an OCO order. Oh, am I going to get a chance to get this order placed before it runs past it again? So what I'm doing is I'm bracketing this range that you see right here. And you can see they're fairly content to be in this range. So a breakout might actually carry a little bit of follow through with it.
Order filled. Order pending.
Okay, things calming down a little. Oh, all right, hold on a second here. Oh, okay. Hold my stop just a little deeper. With orders like this, if you're using your buy and sell market buttons or OCO orders, I find it's important that you go with single contracts because you have the potential of messing up your risk parameters. Oh, don't take me at break even again. Why don't I just take the profit? Oh, Eric. Well, Mom always said you weren't quick. Ever since I got dropped on the head. No, it's just a joke. Bad joke. All right, what are parabolics looking like? Okay, parabolic's going to make things a little bit cozier. Maybe protect a little bit more profit if we actually get a little bit of follow through on this. Okay, well, at least this time I got a little bit of profit out of the trade. Where did I get tagged on that one? I got hit at 56.75 quarter. Okay, and now they're backing up on themselves again. as seems to be the theme du jour. All right, boys and girls. Looks like the buyers are going to try another push here. And as you can tell, I've been a little bit more bullish here this morning. And again, that's based more off the fact that we're trading off of Friday's lows and the overnight lows. Okay, I'll stay here in the Raptor, although it looks like we're getting similar signals with the other tools. All right, there's the buy signal. I'm just going to punch in with a buy, and I'm going to run my stop below the swing low because, quite honestly, that's the only stop that seems to make sense right now. And this will be a good time to answer Piotr's question. Piotr asks, good morning, Eric. Well, hi, Piotr. Can you tell me, please, which market, in your opinion, moves quicker and leads the other markets? I mean, markets are correlated, and I think by observing the NASDAQ, the Dow, and the DAX that there's some pattern between them, but I haven't figured it out yet. Maybe you have noticed something important. Okay, you're absolutely correct. All the stock markets are correlated to some degree. So that means the E-mini, the Russell, the DAX, the Dow Jones, and the NASDAQ are all going to have a tendency to move the same direction. The late Marsh Jones actually observed that if the NASDAQ and the Dow both made a prominent move in the same direction, that they would lead the E-mini. Now we're talking here not monster moves, but rather, let's say he was following the, excuse me here a second, I'm going to hold my stop. If he were watching the Dow and the NASDAQ side by side and there was a very quick move, like let's say this unfolded within a matter of seconds on the NASDAQ and the Dow, he knew he had a few seconds before the E-mini would catch up. So he would just punch in a buy order on the E-mini, knowing that the E-mini would catch up to what the NASDAQ and the Dow were doing. That, by the way, still holds true. He never even watched the charts. He would just watch the time and sales, and he would watch for these spikes in the time and sales. The DAX, a lot of people believe that the DAX leads other markets. So hold on here a second, and I will get you a DAX chart. Bear with me here for a moment, and I'm sorry, I can't help it. I'm going to try to run it out again. All right, so here now, oh, why don't I have the data on the DAX? Oh, does my new data feed not include the DAX? It doesn't look that way. Doggone it. But a lot of people felt that the DAX would lead the other markets, that the DAX would be most responsive. I haven't found that to be true enough that I'll watch the DAX as a clue to what the others are doing. You can watch the DAX for correlation, but I wouldn't watch the DAX so much as a leader, if that makes sense. Another market that people like to follow, or even one that I used to follow, would be the bond market. And just a moment here, I'll bring you a 30-year bond. Now, a lot of traders believe the bond traders to be the smartest traders in the world. And if you think about it, when you're trading at $30 a tick, you can't afford to be wrong all that often. Where did I put my bond chart? There it is. Okay. There tends to be an inverse relationship between the bonds and the stock market. That means if the bonds are going up, the stock market has a tendency to go down. If bonds are going down, the stock market should have a tendency to go up. Now notice the stock market is trying to go up, but the bonds are kind of holding steady, aren't they? They haven't really ticked down yet. So what do the bond traders know that the stock traders don't know? So now, excuse me. Let me get what's going on here? Sorry. Yeah, look at this. There's trades going through. The bonds aren't budging. So you can watch any of those markets as clues, but I also think it's important that you trade each market um, independent of the other, right? You need to treat each market as a separate entity, which it is. David says, nice trade, Eric. Thanks, Dave. I finally caught one this morning. The market's all over the map here. Didn't really have as much follow through as I hoped. You know, if I wasn't so stubborn, I would just be taking profit on target. All right, here come the sellers again. And now we're going to get a possible cloud crossover to the short side. Let's see what the other tools are doing. Oh yeah, we're into the hard edge, so you should anticipate a reaction. The hawk producing a first micro macro cross lower. So for you hawk traders, there's an opportunity for you. I probably would take it, below the low. All right. So we're short on that hawk trade. I've opened up the profit target to see whether or not we're going to get any follow through from that. Okay, David's asking, I forget exactly where your entry point was, but my question is, did you write out that sideways period where there was that number 2 short signal? Okay, 1 second here, David. I'm going to get a stop strategy in play. All right, and now I'll just leave that to simmer. Okay. So I think what David is asking about is, okay, David asked, but the question is, did you ride out that sideways period where there was that number 2 short signal? And if so, could you talk about the psychology of bearing that much uncertainty before getting the reward it had, taking off, making a new high for you? Okay. You're never going to have all the pieces to the puzzle, right? You got a market that is sideways. We're trying to get higher. We're trying to get lower. We're trying to get higher. At this point, I decided maybe an OCO order is appropriate. So I look to buy a breakout higher. I look to short a breakout lower. That was the grand plan for the whole thing. When the market is moving as much as it is today, when there's as much volatility as we're seeing today, you need to, Peter mentioned this earlier about how you want to be sure you don't get stuck trading too much. The temptation on a day like today is just going to be to jump in on signal after signal after signal. And even though the signals are valid, it's a very dangerous thing to do, because now all of a sudden you're taking too many trades. If you go into the day with the mindset that you're only going to have, say, three trades, you can let this volatility pass you by. So what if the bottom of the market falls out? So what if the market rallies to new highs? It doesn't matter. Your objective is to make money and not lose money. And to that end, you need to be very picky about which trades you're going to take. They're going to tap me here at break even yet again. So here this morning, what is that now? That's like trade number 5. So I'm way, way, way over quota. Most of the trades have been break-even trades, so no harm, no foul there. But I did suck up a stinker out of the open. So I think, David, the answer to your question is that you just need to try to exercise some patience. Remember that you're trying to look for quality trades. If it's not a quality trade, then let the signal pass. If you're not sure whether or not it's a quality trade, then it probably is not a quality trade. And if the signal runs away on you, if it rallies and, like I said, goes to new highs, well, so what? You'll catch it the next time. Here we have a lot of alternating signals again, so the market looking a little bit congested. Right, so here's perhaps another opportunity for an OCO type order. So we can look to buy on a move above the high, and we can look to short a move below. And let's see if they're going to give me that chance. All right. I was going to place the stop right below here, but they've already stumbled. Ryman says, Eric, I noticed you're using 7-day data looking at your range indicator. Any comments? Which one was that? I'm not sure what that is, Ryman. I'll give you a chance to elaborate on that if you like. All right. Piotr asking one more question. Well, you can ask as many questions as you like. That's why I'm here. Have you ever found yourself in buying the market when other people are selling it and the opposite, selling when others are buying on support and resistance lines? If yes, how are you managing risk in these kinds of situations? All right, so I think what Piotr's asking is, if the market comes up here to the primary resistance, would I sell it when I have a limit order waiting for me here to short it? And would I put a limit order down here? Oops. What did I end up doing there? Okay. Let's cancel that. And would I put a limit order down here to buy it? No, I don't usually trade that way. There's the reason I don't is I prefer to let the market show me what it wants to do. In other words, I tend to be a little bit more reactionary to my trading versus trying to be predictive. Like if I'm going to start selling up here and I'm going to start buying down here, I'm predicting that the market is going to react. Now the support and resistance lines are very good, but they're certainly not 100%. So the market may react there or it may not. I would rather say, okay, the market is making a cloud crossover. I'm going to produce a signal. If the market trades, I don't have the signal here yet, but we're going to pretend. Let's pretend we have a complete signal, or I'll use this one. If the market trades above this level, then I will get long. So what that does is it makes the market come back and actually engage the order. And what I'm hoping for is at least enough momentum to get to my profit objective. So I have a tendency not to be too predictive with my trades. Now that's always, what's worked for me. The nice thing about trying to be predictive is that you can usually keep a relatively tight stop. So if you were going to start shorting, say you were going to start shorting 56.98, you may only give it to 57.02. So the market would come up here, hit the resistance line, maybe get up a little bit, and then you would be looking for a move lower. These types of trades as well tend to have a scalping mentality to them. You don't usually hold on to those for too long. It's usually you just try to grab a couple of ticks off of a reaction. Piotr's asking, even when coming into major resistance, yes. A double top is not a double top until you get the reaction. A double bottom is not a double bottom until you get the reaction. asks, I mean some kind of formations like triangles and flags. Yes, you know, there's so many different ways to trade. The most typical way that traders do this is off of trend lines. This is why trend lines work. You know, there's no reason for a trend line to work. You got a selling going on here, you've got selling going on here. There is absolutely no reason that the market should start to sell at 56.82. No reason whatsoever, other than traders drew a trend line and then they start selling at 56.82. Market comes back, hits the trend line again, they sell 56.78. There's no reason for that other than traders are waiting there with their limit orders trying to short the market. And the same will be true once the market establishes a bullish trend line. Traders will be watching. Every time the market gets down to the trend line, they will try to buy it. Is that a good strategy? Well, it's a strategy. It's not a bad strategy. But it's a predictive strategy. Here, we're going to do it here in a second. If the market comes down here to the trend line, I will look to buy it. And I'll show you how it works. Now, I'm just going to use the buy market button. You could place a limit order. You know, you'd have to change it all the time as the market kept changing. But it would look something like this. I'm expecting the market to come tag the trend line. I'll buy it. I'll risk a few ticks. But this will be easier to do this way. If it comes down to the trend line. Okay, I see what you're after now, Ryman. I'll address your question here in just a second. Okay, so I'm getting ready. I'm just going to buy one contract. I should have a stop and play also. There we go. Enable my stop. So Trade Manager will automatically give me a stop as soon as I hit the buy market button. And we're going to have traders here looking for an opportunity to buy on contact with the trend line. As soon as it hits the trend line, they're just going to start slamming in their buy orders. All right, here they come. Oh, let's see, there's a little premature buying. I'm going to wait for them to actually hit the trend line. Oh, they're not going to give it to me. Stinkers. See, there was a little reaction of the traders who were waiting for that trend line bounce, and they got it. Now, again, see, they're probably just going to get a scalp out of this. See, they're starting to bail as traders are selling 5,700. But when it comes back down to the trend line, they'll try to buy it yet again. Adjust my trend line a little bit. Okay, here they go. All right, so I've touched the trend line. I've got my buy order in. I've got my stop nearby. And I'm just looking for a little bit of a reaction now. And again, this is the type of trade you're probably going to do better with a scalp target. If you're just looking to take $50 out of the trade, you're probably going to do a little bit better with it. And we should get at least a scalp out of that. 40, come on. No, not yet. See, this is the problem with being predictive. Come on, get up there. They got close. They got close to our scalp target, but not quite. The nice thing, of course, is you gain an earlier entry. The downside is you're trying to second guess the market. The other bonus is that you keep your stops relatively close by. Okay, so we hit the break-even trigger. But there will come a point, just as it did right here, where that trend line isn't going to hold anymore. Then all these people who have been trying to buy the trend line, of course, are going to get stuck on the wrong side of the trade. Oh, imagine that, another break-even stop out. So to answer your question, Peter, it's fine. It is a way to trade, but my personal preference is to wait for the signal and to wait for the market to react to the signal. I hope that makes sense. I feel like I'm ham-fisting all my answers today. Oh, I see. Okay, Ryman says, I see on your range bar, you're back to 611. Is my data series set on 24/7? No, it's 24/5. But yes, I prefer the 24/5 instead of the 24/7. The only difference is a few hours on the Sunday Globex Open. All right, excuse me just for a moment. I will be right back. Okay, I'm back. What did I miss? Not a whole lot. Okay, looks like they're going to try to press higher one more time before the sellers are very likely going to knock them down again. We're getting a kind of a bit of a sideways pennant type formation. So here's the rally for the last 20 minutes or so. You can see we've got this nice little bear flag type thing going on. We are just all over the place this morning. Just a crazy, crazy day. You know, the signals are almost printing too much here. We almost need to dial down the sensitivity a little bit. Hats off to the Bulls. My goodness, they're making a huge comeback after Friday's free fall. Fred says I went to a 14 tick chart. That might not be a bad idea. Increase the brick size. That'll take some of the volatility away. Tony's asking, I had to rebuild my NASDAQ chart slash workspace, and for some reason the support and resistance lines are not displaying, even though it is selected in my instrument settings. Any ideas? Do you have enough days loaded, Tony? That's the big one. So if you go to your data series, you need to have at least 10 days of data for your support and resistance lines to display. All right, here come the sellers. Going to get a trend change signal here on the Falcon. We haven't tried a Falcon trade yet. There it is. Trend change signal.
Order pending. Order pending.
I'm going to stop doing that tomorrow. Tomorrow I'll take profit on target. Today, with all the added volatility, I can't help myself. I need to try to run some of these out. And we're back at break even. Let's see if I can get a swing on this. I would have hit my, or would I have hit my high probability profit target? No, not yet. I would have tagged the break even. Oh, come on. Get down below this low, and we should see the market tumble a little bit. Oh, you stinkers.
Order filled.
Oh! Scoundrels. All right, gang. Oh, Tony says you got 31 days loaded. Someone else was having problems with their support and resistance sweep this morning. Try uninstalling it from your chart and reinstalling it. Also try rebooting your Ninja. If neither of those things fix it, you should have to shoot an email to Ben, and he'll get you squared away. Yeah, Aspen says I'm in a lot of pain. Yeah, those. Well, at least a break-even stop out is better than a losing trade, but not by much when I think about how much money I left on the table this morning by trying to run the trade out. I would have done so much better if I just took my profit when I had it. Okay, we'll stay for one more trade, and then I think we're going to pack things up for today. We're still a long ways off, but just I'll mention it to you now. We are going to take a break the first week of July. The market with U.S. Independence Day falling in the middle of the week, that whole week is going to be untradeable. So we're going to take that week off. Are you going to give me another chance? Yeah, and Aspen says Canada is going to be 150 years old. 1st of July. My friend made the remark last night that he's half as old as Canada, which was kind of amusing to think of. we're still kind of drifting here. I almost thought they were going to settle into a direction. We're getting a hard edge bounce, got the red bar buy signal there. First micro macro cross here, late filter entry, and a trend change signal in the Falcon, so everything looking a little bit more bullish at the moment. But we just don't seem to be getting those follow-through bars. The signal will trip, go a couple bars, and then kind of roll over on itself. I would have actually, I was going to say, would have favored a short move. Only because of, it seems like, oh gosh, I don't know. I was going to say, it seems like the market is more bearish, but that's not fair to say because we're right back almost to where we started the day. Look at this daily range. That's a pretty big one. But you can never count the buyers out. Francisco asked, what is the max display setting on your monitor? Well, it's a 21-inch monitor. I've got two 21s and a 23. All right, boys and girls, it looks like they're really starting to go sideways on us now, so this is probably a good time to close up shop. And I will see you again tomorrow. We can probably expect more of the same. The market really starting to wake up now. All right, I'll talk to you tomorrow. Have yourselves a wonderful day. Bye for now.